Hey, how's it going, guys? Welcome back to mentfx. This is going to be a very quick video telling you to stick to your bias and follow your rules, and the beauty behind a profitable system that occurs when you actually follow your rules. So it's been an absolutely amazing week. I'm up pretty much for the whole week on stocks. These are all running positions after partials, mostly locked in at break even, so stocks are going fantastic. And yes, what we do applies to every single time frame, every single market, including crypto and currencies. Currencies, we're currently in the sell right now. Beautiful sell down. A few people in the mentorship are actually in it. I've been kind of keeping people updated with it. And again, if you did join, recognize that they are not signals. I don't always send stuff right before it happens or as it happens. Sometimes I'll send it right after, but I leave updates all the time. But most importantly, you get access to a community and a group that is constantly vibrant, active, and posting their trades, their thoughts, their new things that they've discovered, such as like the tank strat, for instance, by our good boy Mike. And we've had a lot of other stuff, especially in the section, as well as the one-on-ones. Wait, what just happened here? Oh, so I guess we just closed out of FTSI, so that just hit stop loss. Or actually, it just hit break even, so that's fine. Good to hear. Not bad at all. Still up for the week, doing fantastic. So that's really nice. Now, the main thing I wanted to talk about today was the fact that when you follow your bias and you follow the RR approach, psychologically wise, you are going to create an environment for yourself where you can be profitable over a long time without having to worry about taking losses. What you guys have to recognize is I actually love to take losses because I know they're going to highlight and underline how my system actually works. And the great thing about having a system that actually has losses is that you recognize that that is what makes you a good trader, the ability to actually take them. So if we overlook our past week or so on EU, you'll see I have a lot of markups here. We are not going to walk through every single trade here, but just by looking at this image right here, so these are pretty much all the trades that had surpassed this week. What do you see? I'm sure a lot of you are going to see, right? Your eyes might be, the first thing your eyes probably go to are the fact that there's this -1, a -1, a -1, a -1, even in here, right? If we just zoom in, these are much lower time frames. That's why it's hard to see them. Even here, there's like 3 trades in here, but you can't see them because they're on much lower time frame entries. Right, you have a -1, minus BE. Was there another -1 here? I thought there was. Oh, this was another break even also, by the way. Right, so you take a look at this and you really get a little bit confused. You see it and you see all these -1s. But then when you get a little bit deeper, you start recognizing that this one trade right here that ran the first partial at +5, the next partial at +4, the next partial at +7.5, the next one was +2.5, the next one was +3. And by the way, the reason these numbers decrease as we get further out is because as you partial, you're taking off larger amounts of your trade. So as they get to higher RRs, they might not be securing as much, right? So even though this trade right here ran 1 to 90 RR, I didn't catch 90% on it. I caught 3% at the very end, 2.5 at this liquidity high, 7.5 at this supply zone with the inefficiency, 4% at these highs here, and plus 5% at this supply zone. Right, so it magnified. What's the reason for entry? You can see this little line here. Very, very simple, something I teach in my other videos. Make sure you check out institutional orders to understand how and why I thought about getting involved here. But ultimately, if we just take a look at this, I had the top of the previous week on there, the low of the previous weekly low on there, and then I just went to a lower time frame, and as price came to tap in right below it, we understand that we're grabbing a shit ton of sell stops because that is a weekly level that which people are basically placing many stops at, including retail, including banks, all the fun stuff. We get involved right here and we begin to take that up. And as we take that up, you can see I began to look to sell down. I really did not know at the start of this week whether the market was going to be bullish or bearish. I actually had no clue. I knew that if we were going to be bullish, we'd probably make our way up into this supply zone right here, which, by the way, yes, I had on here for a while. I believe it was a 4-hour or a 1-hour zone. I'll go find that for you really quickly. Oh, so it was actually a daily. Yep. So as you'll see right here, most recent break was this one down here. We understand this is a supply zone, and we went ahead and refined inside of that supply zone to the actual area we basically wanted price to come, which was this wick right here. So you can see this last up move before the down move left behind inefficiency, and that was basically that larger time frame fractal with this breakdown, right? Created our lows and highs, created an area that price may want to reach back up into. So really at the start of the week, and I'm going to say this on the public YouTube, you guys are not going to believe this, mentfx did not know where price was going to head at the beginning of this week. I had no clue if it wanted to go bearish or if it wanted to go bullish. But the beautiful thing about smart money and the way we trade is it's a tendency-based approach, an approach that is based in the fact that we understand that when we're getting involved and we're taking a trade back down into an area, we're doing so on the precedent that liquidity of some sort has been cleared, and as a result, some kind of new structure may have been put in place, and that new structure, with its newly established ranges and protected highs and lows, is going to come, mitigate previous zones, previous supply zones, previous buys to sells, previous manipulations, and take that price lower to either your very first partial, your first point of liquidity, or to significantly lower prices. The truth about most of these markets is I'm not always exactly sure where they're going to head. All I know is the specific footprints left behind that I want to trade from, and when price makes its way into those in specific deliveries, such as the way it forms S&D zones, the way it leaves behind inefficiencies, when the inefficiencies happen and when they get fulfilled. Is it during very liquid sessions, non-liquid sessions, and how do they get filled? Are they just getting snapped through, or are they undergoing that bit of manipulation, liquidation, break of structures, continuations in the form of Wyckoff accumulations and distributions, something that I'm going to dwell a lot deeper into in the future of this channel. So I actually, this video should have been the video telling you guys about Ment funding going live. Sadly, there was some complications on the back end, so we're just waiting for some approval. There was just some late end stuff from another parent company, so the second that gets approved, it should be out to you guys. So next video, stay tuned, because it should be the release of the prop firm, which is going to be phenomenal, giving you all a chance to actually take the knowledge given to you here that you've tested hopefully and have created a system out of that you know is profitable, and take it to the live charts with Ment funding. So I'm looking very forward to that. But as you can see, start of the week, so this is going to kind of be an in-look into what we do in the mentorship. There's been people that have caught some really, really beautiful stuff on GU this week. I hope you guys saw it on Instagram. If you didn't, make sure you follow me. Also, there's going to be another one-on-one giveaway. So hashtag mentfx in the comments if you're still in this video, and one-on-one is coming your way. So again, we had this weekly high, this weekly low. Weekly low gets traded right under, and that was that 1 minute entry, that 5 minute confirmation. There was a few confirmations there to get involved in that buy, right? And as you can see, ever since we got into that buy right there, as price was going, I was beginning to look at the new, well, actually the predominant structure, which was still bearish, to keep taking those sells down. You can see I had sell right here. They didn't get a chance to break even, never broke down into new structure, came up. I had a very, very low entry here, right? Even if we ran to like this S&D here, that would have been already a plus 3%. If we even ran down here into the deeper demand, or even to the equal low liquidity, would have been an easy 17%. You know, of course, prorated with the partials that we take. And again, didn't happen, -1. Kept going bullish, began to have these big bearish breaks down. What was I doing again? I was getting into sells. Why was I getting into sells? Because I was emotional, because I was over trading? No, it's because I understand a specific system approach that I like to follow, that I teach you guys in the mentorship, that I give you entry criteria for, that all of you are able to create an overall profitable system for yourself, especially people on the YouTube channel. You guys know this. You've been on this YouTube channel. A lot of you have found profitability without having to be in my course. So again, you don't need my course. You don't need to join. But if you want to, it's going to change your fucking life. So as you can see, we were looking to get involved in all these -1s. But as we're doing that, this buy continued to accumulate. It continued hitting our highs, our S&D zones, our inefficiencies that we continued the partial at, until our final daily refined to the 4-hour supply zone, defined by that manipulation candle on the left that took out that liquidity, that created that inefficiency, was tapped into. And upon that tap, you can see I began to look for sells down. I had a very nice +5 RR run here. Well, actually it was a +10, but I took partials. And I was actually taking this to go still all the way back down into the demand zones in here, the inefficiencies in here, as well as the equal lows here. So I was actually, for most of the week, you can see all these sells were based on the premonition that, you know, I didn't know if I wanted to go bullish or bearish. All I knew is that this created liquidity. I was in that buy, and if that buy was going to hold, then I'm going to make money on that buy. But if the sells are going to take effect and start to move, that's where I want to take them to. And this is going to work a little bit into the hedging video that I'm going to create in a few weeks' time. I don't know exactly when, but if you guys do want to learn about hedging, do let me know in the comments below. Let me know if this has actually been helping you and stuff. I love to hear your input, and I love to make videos that help you guys, of course. So as you can see, I had this trade here, which I was looking to take all the way back down, but No luck on that. Instead, it just hit the partials at this liquidity right here at plus 10, hit that plus 5, continued bullish, continued bearish. And you can see in here, there was a few -1s, right? -1, took this right here, ended up breaking even and then running in. So if I just held this without breaking even, I would have made money. But again, this is not an if game. There is a rule-based approach that I follow for myself. And if my rules are met, then I will enter. And if my rules are met for partialing, I will partial. And if my rules are met for breaking even, I'll break even. And that means that sometimes I'll miss trades. But luckily, as we kept going, we got another trade, which did run. Actually, you can see this. You can see this sell right here. Ran a total of 40 RR, but I only took partials at this low right here at about 10 RR. Secured that plus 5 on it. And I wanted to take this all the way back down even lower and start securing RRs at much higher runs, but that only locked in that plus 5 and then hit break even on this move back up into here. I looked to take this buy. My first partial was actually going to be here. And when I saw these equal highs made, it was really nice. And then it came right back down to break even, right? But as I do this for you guys, and I just kind of walk you through this analysis over just this week, and yes, this is only this week because I like to get involved on much lower time frames. I really don't look at anything else. I know I have all these pairs here, but really, I kind of only look at EU. I'll look into other pairs and cryptos and all that fun stuff for people in the mentorship all the time. And I always want to see what people are up to because it helps me keep in line with the game. But mainly I'm on EU and on my larger term stock plays. So I'm always getting involved in stocks during the week because I have a very simple daily approach I use for that, which I do outline in the mentorship and will be outlining in the future. So if you want a piece of that, make sure you join up with the link down below. You can see it on the screen even. Now, you know, as we continue, we just kind of work through this, even if we get onto this lower time frame. So right now we're actually in the sell right here, and that's running beautifully. It hit the first partial right here. Only secured plus 3 because that was a 6 RR. I'm pretty sure, right? Was that a 6? Oh, it was 8. No, but I took a partial here. It wasn't there. My bad. So this was the partial. Okay, my bad. Scam. All right, it was a plus 6 right here, so that ended up being plus 3. I took out that 0.8 because the commissions on these and even this one pretty much added up to make up for that 1 RR. Then the next partial was here at about 1 to 19, securing about 5. And now we're looking for a partial down at these equal lows here, right there, which should secure another, what is that, 3.25 RR, I believe. And then overall at 30 RR, and then looking to take that much lower because again, I don't know if this price wants to go up and take out these highs finally, or if it's ready to now continue right back down to start liquidating all these lows created over this week, right? Because this could easily start to come and liquidate all these lows, which means that these sells that have been taken will be able to run. Now, I don't have any buys running anymore. You can see this was the only buy I had running this week. But what's beautiful about this image right here, right? Take it, stamp it, print it out, put it in your passport, stick it on your forehead like 6ix9ine, whatever you got to do. Recognize how many losses and break-evens had occurred, how many lines you see drawn in that had no plays around them. Like you can see some of these lines that I drew in, and a lot of these areas, and I deleted a bunch. There were a bunch of S&D zones inside of these prices too. You can see that a lot of them didn't get tapped into, and a lot of them didn't have trades from. And even if they did have trades, they either got lost straight up, right? This can be very demoralizing for someone, but they either lost straight up, took a lot of break evens, right? And there was nothing really that happened. And to an untrained eye, or to someone that hasn't been studying smart money to understand the type of moves you're capable of taking and how you can look to partial, take liquidity, and manage your positions, this can look very, very demoralizing, especially if, imagine this buy right here didn't exist, right? Imagine this buy didn't exist and all you saw was this -1 at the start of the week, then a -1 at the start of the week, a -1 at the start of the week. This right here could be a very demoralizing thing to see for a lot of traders. They're not able to see this and then consistently follow their rules because they think their rules or their strategy has stopped working. The reality is it hasn't. The market is not always going to deliver the exact price you want. Your bias is not always going to be correct. But at the end of the day, the rules you outline for yourself based on profitable standards, based on something that you have tested, based on something taught, let's say in the mentorship, you know that over time that edge exists. And as long as you execute upon that edge, whether that means you reduce your risk to execute that edge or keep the risk the same, this is all going to be personal as well, that is what's going to create profitability over a long standing, right? Because then imagine that you hadn't taken this little trade right here, which did secure us 5, 10, about 20, so about 23 RR, right? And overall it ran, yes, 90 RR, but again, I don't catch 90%. I catch partials of that 90 RR that the trade overall ran, right? This is just normal risk management approach. This is a normal way to think about it. I'm not going to go into this and tell you every single thing. Instead, I'm going to say this overall trade did run 1 to 90. Yes, if you held, you would have secured 90%, but that's not how it works for me, right? And I don't even risk 1% of trade, as a lot of you know. And I'm not going to delve into that right now. That's for another future video. That's probably for the future sections of the mentorship on risk management. Now, again, these -1s can be very, very demoralizing for someone, right? And let's say you kept following your rules and then you hit that +5 right here, right? Recognize this tiny trade right here. It actually ran further, right? We were talking about this to this partial. That was that 1 to 10 partial at the +5, right? For someone that, if you kept following the rules and saw this, you'd be confused because these huge trades right here all went to -1, but this tiny little trade right here in this little box, even smaller than the box I drew, ran more RR and made you more money than all 3 of these trades combined, right? This is why trading can have such a psychological issue for a lot of people. They're not willing to accept that 1, losses are going to happen, but even 2, that your wins can be tiny, can be minute, and still secure you more than your losses. Or 1 win can secure an overall batch of losses over an entire week. Or the fact that you're going to have non-stop -1s, break-evens that could feel demoralizing and could make you feel like you're on the wrong side of the market, or even SND zones that get tapped into but you don't get an entry from, or other SND zones that just get left behind, because I'm sure you've had this happen where price goes and just keeps going and never comes to tap back into any of your zones, and you start getting emotional, you start floundering yourself in, you start to, you know, just force, and lo and behold, the second you start forcing, everything just goes haywire, and now you're left wondering, what the fuck is this market doing? I'm never on the right side. But the reality is you're diverging from the things you've been learning, right? If you actually execute the things you're learning and allow those entries to come to you and allow yourself to properly partial break even, that means even if you're down 3 RR and your first partial on a profitable trade is 1.5 RR, you shouldn't be sitting there going, nah, I'm gonna let that shit run, baby. I'm gonna let it run more than my losses I gotta make up. No, it means you follow your rules despite how much you're down, how much drawdown you're in, or how much you're up. A lot of people also do this where if they're up X amount on their account, they'll start to risk more, not in a compound sense, but just risk more. Or in other senses, they'll be up on an account, so they'll change the way they partial. They'll start partialing quicker because they're up on their account. They don't want to go down. They don't want to go negative. But that partialing quicker, imagine this trade right here. Imagine I had partialed this trade quicker because I had a good week back here. Imagine I had a really good week, then I started partialing this a lot quicker and just got out fully, and then I started taking these -1s. Well, these -1s are going to very quickly catch up to your wins because you're taking out your wins quicker and letting your losers run now, right? Which means you're going to get back to that break-even sense, which again is going to start that beautiful circle of life, the cycle where you're back in just over leveraging, over risking, losing, and then blaming your mentor, whoever your mentor might be, right? This is honestly the cycle of a lot of unprofitable traders, and you need to snap out of it. Recognize that there is a skill set. There is a way to approach it, and there's a mathematical edge that exists behind the way you trade, which is why I've always been a proponent of testing your system, of understanding your system, and laying out ground rules that are refined and understood from the first inception of the entry and the bias to the last point of liquidity being met, to the last managed partial you take. So if this video stands as anything, it's to recognize that you're going to take losses, you're going to take break evens, you're going to get and miss moves. But if you understand how to outline a strategy, which, by the way, if you need to learn how to do in a more concise, structured, and professional manner, especially surrounded by the best people in the industry, check out that link in the description and below the video. Otherwise, of course, just pay attention to these videos on YouTube, take notes on them, go to the charts, get your Excel sheet out, and test it, right? There's no one in this market that you're competing against that isn't yourself. You're the only competition in this market. So go and prove to yourself that you have the confidence to do what you want to do on the charts and that you can execute. For the winner, please reach out to me. YouTube giveaway picker. So for the winner, please reach out to me on Instagram. That's @mentfx. Very normal, very simple. Also, if you guys haven't, please follow me on Instagram. It's really the only place that I'll kind of respond to you unless it's in the comments. I love responding to you guys in the comments. So you know, leave as many comments as you'd like. But let's go ahead and do the giveaway. So let's enter the link. We'll filter duplicates. We'll include replies. Do not add extra entries. Filter comments based on specific text. And we're going to have hashtag mentfx. So let's find all the YouTube comments for that specific one. And again, I will be giving another one-on-one out this time as well. So, wait, is this the right one? Is this the hashtag mentfx one? Yes, it is. So again, leave a hashtag mentfx and a small comment if you feel like it in the comment section below, and I'll make sure that you're added for the next giveaway. And also stay tuned on this channel. We'll start this up. And also stay tuned on this channel for the Ment funding prop firm coming out very soon. So let's start this raffle up. And the winner is Harry McCobe. Hashtag mentfx. Didn't even leave a comment. Nice. All right, congrats, man. You're the winner. Please reach out to me on Instagram and all. It's going to be great. And now again, just back to the idea of this overall video, just so you guys understand it. Stick to your rules. Recognize losses are a big, big part of the game. Enjoy your losses because they actually will define the way you trade, your edge, and your wins, right? Without losses, there aren't going to be wins. Okay? Even if you think you can, even if your scam mentor said you can have a 100% win rate, it's bullshit. If you have a 100% win rate, it's usually a 98, 97% win rate, which is based on a mean reversion strategy, which is oftentimes going to go and basically lose you your entire account when it loses, right? So that happens every, 8 years, if anything. So if you want to be profitable for 8 years, follow a 98% win rate strategy, which will eventually lose, or learn to trade under a characterized mathematical approach with an edge-based system with an understanding characterized by both this channel and the mentorship below. Thank you so much, guys. I appreciate you so much for sticking on, if you're still here, and I'll see you guys all in the next video when the prop firm will be released. Thank you very much. Love you all.